Hi there traders, this is Steve Miley, the market chartist for FX Explained and our regular weekly macro watch updates. Been missing for the last month in here, but we're back again for 2021. And we're going to have a look at the week commencing the 4th of January 2021 to kick off the first trading week of the year. And we're going to be looking at the market ending 2020 in risk on mode. So let's take a look at the macroeconomic and geopolitical developments first of all. Well, there was a $900 billion COVID-19 relief bill was passed at the end of 2020, and that has certainly given markets a more positive tone and kept them very much in this risk-on mode as we've gone into the end of a very unusual year for 2020. And also we had the EU-UK trade deal finally done at the 11th hour, going into the holiday season and coming into effect at the end of the year, at the end of last week, at the end of 2020 as well. Again, markets taking that as definitely a positive risk-on statement. However, elsewhere, globally, Europe and the US particularly, we're seeing COVID-19 cases surging. The new variant of COVID-19 spreading globally, having been first identified in the UK. And we're seeing surging cases, hospitalisations and deaths across the planet, but particularly being seen Europe, UK and in the United States. That has brought about more stringent lockdown measures, and they may be about to be increased too as we go into 2021. And obviously the negative effects there on the global economy. However, on a brighter note, the Pfizer vaccine is being delivered to much of the planet already, and the Astra Zeneca Oxford University vaccine is due to be delivered from this week in the UK, having been given approval. So let's take a look at the global financial market developments at the end of the year, the week ending the 31st of December 2020. Well, the DAX hit a new record high, that's the German index, with most of the European markets at or near cycle highs, but the DAX actually eclipsing its early 2020 high, and the high posted back in February at the end of the year. And we've also seen the major US equity averages hitting all-time highs with the last trading day of the year. The Dow Jones Industrial Average here, also the S&P 500 and Nasdaq hitting record highs at the end of 2020. The US dollar continues weak in here, making new lows towards the end of the year, with the dollar index reflecting that. And we've also seen most currencies rallying against the dollar, therefore. So we've seen the Australian dollar hitting new multi-month, multi-year highs, still strong, alongside the New Zealand and Canadian dollars. And in Europe, we're seeing the pound pushing higher against the dollar. Not only dollar weakness in here, but also pound strength from that positive outcome from the EU-UK trade talks. Gold stays positive, more of a consolidation theme to the end of the year, but trying to continue its December rebound. Whilst in the oil markets in here, the rally from November stays intact with a dip and a rebound at the very end of 2020. Copper is a little bit more hesitant through December and into the end of the year, however remains solid, and that underlying bullish theme remains intact. So let's take a look at the week ahead, commencing the 4th of January. So first off in here, we have the Georgia Senate runoff elections are on Tuesday, the 5th of January. Probably the most important thing that we're going to be monitoring this week. Can the Democrats also take control of the Senate? At the moment, it's seeming unlikely, but if they do, the Democrats do take control of the Senate, it's going to have significant implications for markets. Markets will probably take that as a risk-off event, given that then the Democrats will have full control of the various parts of the US political system, the Senate, the House of Representatives, and obviously the presidency. And if that comes to pass, then there's risk of maybe more negative impacts for business going forward. So Democratic wins could be taken as a negative, a risk-off event by markets in here, and we'll wait the outcome of those Georgia Senate runoff elections from on Tuesday, the 5th of January. Ahead of there, though, we do have an OPEC meeting on this Monday. So we've been monitoring that. And also we're going to continue to watch the rollout of the Astra Zeneca Oxford University vaccine in the UK, and watching for any new vaccine announcements as they might come through over the next days and weeks. However, on the downside, we're also going to have to monitor those COVID-19 cases, hospitalisations and deaths, staying very much in the spotlight, watching those in Europe, UK and the USA. And also watching out for any new lockdown announcements that may come from the major global economic powerhouses. We're going to be keeping an eye on that, with many of those economies in semi-lockdown at the moment, or in partial lockdowns. Are we going to see more stringent measures come through as we go into January and beyond? On the central bank side, it's fairly quiet week. We have the Fed on Wednesday releasing their meeting minutes from their last meeting. So FOMC meeting minutes released on Wednesday. And on the data front, we do have quite a few interesting bits in here. We've already mentioned the OPEC meeting on Monday. We get global market manufacturing PMI on Monday. And on Wednesday, we get the global market services PMI. We get the US ISM manufacturing PMI on Tuesday. Don't forget that Georgia Senate runoff elections as well on Tuesday. And then we get the ISM services PMI down on Thursday. And then what we really must point out in here is that US employment report, also the Canadian employment report on Friday. And don't forget, in the middle of all that, we've got the FOMC meeting minutes. Really, the big focus this week, though, is really going to be on that Georgia Senate runoff elections on Tuesday, and the results as soon as we can get those, potentially coming through Wednesday, maybe beyond that, though. I'm going to wish you all a great trading week. It's great to be back, and I'll be back with you with another macro watch in a week's time. So traders, don't forget to catch us on the next FX Explained Macro Watch and all the great content on fxexplained.co.uk.